All right, let's get the microphone check out of the way here. Let me know if you can hear me across the various chats going on. And I think there is a few places that I could probably share this as well. We might be able to let the monkeys know. They actually do seem to show up and show out, so that's pretty cool. But yeah. Hey Jedi, can you let me know if you can hear me okay? We'll get started after I get some confirmation here. Get the music under control here, and then we'll get rolling.
The Army Air Forces has announced that a flying disc has been found and is now in the possession of the Army. CBR Street Gang, this is all by standing by, over.
All right, so let's go ahead and jump on into the charts. We're going to start with some low-term time frame stuff. That did not work. Let's try that again. Hello and welcome to Landy's Crypto Corner. Today is October. What the hell timeline am I living in? It's March 27th, 2024. Oh my gosh. And welcome to Market Madness Technical Analysis. This is our, well, kind of our daily and under stream for Bitcoin here, where we take a look at some of the lower term timeframes as well. We're actually going to start out with Bitcoin's move today, well, kind of yesterday into today. So in yesterday's price action, we did see it breach above this area around $68,000 to $69,000. We had heavy volume coming in, as denoted by this arrow right here. And I marked the close and the wick on that candle. We saw that Bitcoin went up and tapped on right around $71,000. It started to form a little bit of a range, not really high volume though, as it related to the move up, but did put in a low here on the 15-minute chart, lower high, consolidation, higher low, moved its way back up for a higher high, coming in at around 71,500. Then it came down and put in a series of lows. So 3 lows on pretty decent volume here, coming in to this area above this 68,650 and 68,893. So basically 68,900. Then we saw a bit of consolidation, a move back down into that range, a nice spike up prior to New York session open to hit in the deeper $71,000 territory, near $72,000, which if you watched yesterday's video, which was a recording that was streamed on X and then uploaded right after the stream to X and here on YouTube. So if you haven't watched that, you really should. There's still good information in there. We will review a bit of it, but I go into some higher term time frame detail there as well that I'm probably not going to get into today. In this case, we can see that we saw a sell-off right after market open. So the run up into market open just prior to the New York session, and then it slammed it right back down. Those evil market makers, those series of Steves that happen to be in every single shop, or financial firm, if you like, a financial trading firm in this case. Well, in what did we see? Well, we saw Bitcoin come right back to some of the high volume areas that we have marked here. Now, it did close slightly below, but it did not close below the new wick here that put in significant volume coming into this area of high volume over here. So you can get a read on the volume areas of interest. Now, that is also going to be relevant if this area were to break down. So if Bitcoin does lose this close open high, um, on this particular high volume candle on the move up into overhead resistance there at $69,000. Well, it got above it, so it did validate the move above it, even though it was lower volume on the move up above it. The move back to it saw significant volume. So if this area now between, this 68,000, 68, what are we looking at? 68, 650 is lost. And then we subsequently see Bitcoin lose these wick lows in this area around 68, 370. Then I would be looking for a little bit further of a move down. In this case, we can get rid of this particular setup here. We can throw on our higher term time frame support and resistance areas of interest, and you can see the Bitcoin is trading back in that $69,000 area. So pretty big move down, but it's kind of a big nothing burger. It was a nice move up, nice move back down, grab some liquidity. Can it move down further? Absolutely. Next big area is going to be around 67.5 to 6. And then we start looking towards, kind of that and $68,000 even. And I'll show you why on the daily here. We'll throw on our Bollinger Bands as well. We'll get rid of volume. So let's go ahead and get rid of volume. We'll throw on our Bollinger Band set. This is the Landy Bands. Nothing really too crazy here. It is a triple Bollinger Band setup with some extra bells and whistles built in. And we have our upper first, second, and third standard deviation above the basis, and then our lower first, second, and third standard deviation below the basis band here. The basis band is simply a 20 simple. And in this case, Bitcoin could head down to it. That is in the lower $68,000 region. Bitcoin looks to be heading down to it right now, actually. So, if it does lose the basis band, that opens up the area between the basis band and lower first and this April 2021 monthly swing high at $65,000. So be aware of that. Only if that area is lost would I start looking back to this higher low on the daily and the lower second, which is coming in and around $62,000 to $62,250. If that was lost, though, I would look for expansion down into the big monthly closing high zone here from October of 2021 to March of 2021. Those were the two closing all-time highs, the first one coming in March, and then the higher closing high in October between 61,350 and 58.8. I would exercise caution in that area. If we did start to see expansion down into that support, if that area was lost, again, like I said yesterday, a lot of people still targeting $56,000, $57,000, somewhere in no man's land between supports here. If we start to see expansion below the monthly there at 58.8, I would actually be targeting somewhere around this weekly swing high at $53,000 coming in from September even of 2021 at 53 to the weekly closes there from August and December of 2021 coming in at 51.8 and 50,800 respectively. And as long as Bitcoin is trading and closing candles above this prior low on a close and a wick at around 50,000 to 50,500, it's fine. Much needed pullback. It would be far bigger than the ones that we have seen since the macro low was put in at $15,500, but it would be a much needed correction if it did happen or occur from here. Now, what are my thoughts on price action and what I'm seeing right now as it stands? Well, quite honestly, I think Bitcoin is more set up for ranging activity than not. And in this case, we can see, as long as Bitcoin's above, the basis and hanging out around the upper first, more biased to consolidate to the top side of this monthly swing high zone, 69 to 65K. If it starts to lose that basis down to the lower first, right at that monthly swing high zone from April, of 2021 coming in at 65. And it can even range between the upper second and lower second. It's not really a big deal. I would see this as more of a consolidation than not before a much larger move. And then we gauge the direction of that move based on the expansion of the daily as it leads into the higher term timeframes above the daily into the weekly. If Bitcoin does close above the upper second standard deviation, that would be right now right around or above the all-time high at 73,835. And I would be looking for upside expansion to deeper targets. So basically the highs and higher, somewhere around 75 to 78 at first, and then 78 to 80. If it meets the criteria to get above 80, I would be looking somewhere around 82.5 to $83,000 initially, at least this week, if it did initiate a move like that this week. Now, to the downside, we already explained this. Any closures below the lower second, I'm looking right back to this monthly zone around 61,350 to 58.8. Only if it's lost. Conditional. Only if it's lost in a daily and higher term time frame. Then I would start looking down to the weekly here. Now, to be fair, it could pull back and wick below it, hit that 56 and 57, and then close right back in it. Then you would get the meme pullback somewhere around what Bitcoin has been doing since the $15,500 lows, which is coming in at me searching for the wrong tool here as I'm talking, but that would be your 20 to 22%, somewhere around $57,000, $56,500, depending on your exchange. More shallow pullback is what we've already seen. In terms of the high here, we've seen about a 17.69%. So we have some meme numbers to go by anyway. So if you want meme pullbacks, we got a 69 in there. I'm not really too enamored with this. I think that Bitcoin is in its loading the Bullzooka phase personally from all of the reads that I'm getting on price action. We can see that I can take off the paid indicator here. This is an advanced Stoke. There's a free Stoke that has pivots as well. It's the BA reverse panel, the one that's here. It's searchable in the indicators tab. It has pivots. I have a paid version of a Stoke from app.crowntrading.net, which is from the developer KVDB. It's just got extra bells and whistles. You don't necessarily need it. I like it. I know what all those things mean on there. Not something that you need. If you want to see the pivots, just go grab a free indicator. You can see that Stoke would cross down on any closures below 64,265 today. So again, hanging out in the strong half of the bands looks fine. If it does start to drop the strong half of the bands and head towards 65K, that would endanger that momentum pivot on the daily. That would also be a lower high as it relates to the all-time high up here. Now, granted, it wouldn't be bull lights out until we saw closures below like 62, 250. And even then, I'd be looking right back into the supports and for further consolidation over a longer period of time. So let me reiterate something that we did talk about yesterday, and that is any closures above $69,000 on the weekly coming in this Sunday. And I would be looking for the highs to get tested if they weren't already tested first, and higher. That's where we're getting our potential this week for a little bit of a cap, somewhere around $82 to $83,000 if it really started to push through 75 to 78, 78 to 80, so on and so forth. All based on some of the fib pulls that we pulled yesterday to get confluence in some of those blue sky areas. Now, in this case, nice swing high, nice swing low. If Bitcoin does close above 69, and specifically $69,032.12, it's going to set a low here on a closing basis while also having a swing high to swing low structure. And then we'd be looking towards that swing high again and higher. As it stands right now, it does look as though it wants to range this week. We'll see what today brings. If it can hold up in the areas that it's currently trading in, it's fine. I do think on the daily you can give it some room, some wiggle room around that $68,000 to $69,000, no problem. Even a move into the lower term time frame area here at around 67.5 to 67.8 is fine, as long as it's closing above the basis. That's really what I'd like to see, or at minimum around the basis, and then quickly recovering the daily basis. That's where I'd be a little bit more bullish than bearish. Otherwise, we're looking at a range play and consolidation. So let's go ahead and dive a little bit deeper here. The 12-hour ran the bands yet again. So we had the expansion phase kicking off here. Bitcoin then on the 12-hour here ran down to that monthly support after losing 65K, ran right into the monthly there, popped back up into the zone here, and higher loaded its way back up off of that lower first standard deviation, recovered above 65K, immediately ran to the other side of the bands here and is getting rejected. So from the 12-hour perspective, you can see there's a little bit of an order block here around 67,200 on the open, and on the close, we're looking at 66,828. You could give it room there because it's right by the basis around 66,500. For the 12-hour, we can see movements down to this area, no problem. If it starts close below it, we're looking at 65K to lower first at around 64K. And then below there, we're looking at that higher low again, somewhere around 62 to 62,250. The 12-hour is probably going to momentum shift to the downside if I had to bet. Yeah, there is an initial cross in play right now. And on any closures below 69,693, so basically 69,700. And we would see an initial cross. I'm not enamored with initial crosses. I want to see fully confirmed crosses, so I'd have to see this cross down and then get a subsequent follow-up closure to be looking for momentum to completely shift. And of course, we can gauge that on the lower term timeframes as we come into the next 12-hour closure, which is going to close with the daily. Now, what I would like to see personally is I would like to see it run the other way and hit this monthly again, because that's where the lower second on the Bollinger Bands is. But danger, danger, danger. If it starts to close below there, that's expansion on the 12-hour here. Now, to be fair, we do have a fairly wide set of bands on the 12-hour, so it is painting a bit of a reversal play at the lower second standard deviation and upper second standard deviation, with this volatility read coming in at that 83.73 over 78. So, we do have confirmed upside volatility. If it's above the basis, it's bullish. It's probably going to head up. So from the 12-hour perspective, above 66,500, I would give it some room to around 67,200. It's looking good. Still want to see dailies hanging out above $68,000. Again, why? Because that is where the basis band is coming in right here at around $68,000. So I do want to see dailies closing above there, but the 12-hour has room to move. So let's bring this down to the 4 and 6 hour and see how they are looking. So this is a nice expansive move to the upside. Nice move back to the basis band here. If it does dip a little bit lower, guess what? Lower first standard deviation is right there at that area that I just called out in the low $67,000 region. It's basing right around the highs here, this high over here on the 12-hour. If it were to lose that high and low, the next big area around 67.8 to 900 or so, which is right around this low and this closing high in the 4-hour. And we're definitely looking at that lower first getting hit right around this order block zone, maybe even dips below into the upper $66,000 or hits 66.5. Below there, then we're looking to 65 and that lower second standard deviation around 65,600 to 65,700. Starts getting below there and breaking down below the $65,000 area, we're looking at expansion to, again, 63,800 to the lows again around 62 to 62,250. So you can see how the bands kind of give us those clues. Now this is an upside expansion with a mean reversion play right now happening. Where would I want to see it? For one of my favorite setups for mean reversion is come all the way back to the lower first, be very strong and bullish if it bounced there. It's also in and around some major supports. If it did fall, I would look for an initial bounce off the lower second standard deviation or the support down below it at 65 and then come back to it later. Maybe it could bounce into a reversal, but probably turns a little bit more bearish at that point because of the higher term time frame momentum shift being below the daily basis band, so on and so forth. So when we compare that to where the 6 hour is, the 6 hour also, we're looking at the same read. We got some expansion of the Bollinger Bands on the 6 hour here. So we got upside expansion, mean reversion back to the basis. Oh, hey, where's the basis coming in? Around 67, 7 to 8. Again, you can give it some range down to this little bit of an order block candle. If it does lose this high side structure right by the basis, I'd be looking somewhere again around that 67, 7 to that 66 area, somewhere around the mid to upper 66s at 66 800. If it loses that, then we're looking down to guess where? Lower first test confluence with that $65,000 zone. So you can see how this kind of all fits together. If it was to run all the way back to the other side of the bands here at the lower second, it's right there at those lows at 62 to 62 250. So we keep coming up Yahtzee with these. Let me adjust in my chair here and take a sip of coffee. We see all of the confluences lining up. So, in general, my thoughts are hang out above 68K on closes on the daily, regain 69, more likely to play to the top side. It is looking, on the medium term time frames, at least on today, which is a Wednesday, as if it wants to range a little bit, reaccumulate, and then choose its direction later. I do think that Bitcoin is loading the bullzooka. I'm not, at least right now, as it stands right now, that picture could vastly change between now and tomorrow, say, or between now and our next live stream on Friday. Now, of course, I will have a recorded video out tomorrow, so we would discuss it ahead of time, but it is, it's very much hinting at a more long form consolidation to an upside resolution right now, but that could quickly change, and we will discuss it. We will discuss it if it changes. But mean reversion after a nice move down into supports is what we do want to see. Go and get some liquidity, fill some of my long scalps so that I can play on the other side of my short scalp that I have open, and you do the same, but don't necessarily follow me. Follow your own trading plan. In this case, I don't have any problem with this price action. I know a lot of people are making a big deal about Coinbase and oh my God, Coinbase just put in a bearish divergence top and they're being sued and oh no, and this is going to be a lower high on Bitcoin after lower lows and it's going down, man. It's going to happen. I don't care what anyone says. I don't care what I'm going to move my invalidations until it happens. And it's like, come on. I do think the Coinbase suit is a big nothing burger. Is it shaving off a lot of price right now? Yes. I don't think that's because people are losing conviction in Coinbase or Bitcoin right now. But yes, this is, concerning for them. And they're likely going to win their lawsuit. So I don't really care. I don't think you should care. As long as it's trading above 247, it's looking good. Hell, even if it's trading above 240, it's looking good. What you do want to see is it maintaining closes above this gap up. Otherwise, it could actually dip down to like 209. Is that a really big move down? Yes. Does that likely mean that Bitcoin's probably moving down at the same time? Yes. Does that mean that Bitcoin's breaking the ranges to the downside? Maybe. Maybe it's also coming right back into monthly support. We don't know. We'd have to gauge things when we get there. So in this case, there's bearish divergence all over the place here on the daily. Am I overly concerned about this? Is there's a regular herp and derp, as Crown likes to say, and then make fun of the community kind of making fun of like, man, if people join your channel and don't understand what a herp and derp and like a dildo and like all of these other things are, they're going to be really confused and off put. And it's like, yeah, that's how we gatekeep. I thought that was hilarious. But do you have an RSI head and shoulders? Absolutely. Where would it generally be targeting? Somewhere around the mid zone here, and the mid zone there is around 226 initially, And that would be right around the lows here on the daily, and the lower first standard deviation. Could it dip further? Yeah, you're likely to see the lower second though right around that gap. So could it go for a gap fill at 210 and bounce? Yeah, then we gauge wherever the bounce comes in. Right now it's still in higher high, higher low structure. So I'm not looking at this as like, oh my God, it's all going to fall apart. 262 is the momentum pivot, I will tell you on the daily, though. This is a fresh drive of bearish divergence. It will confirm on any close below Monday's open at 261. So, again, the SEC is going to fail this one. They just don't really have a good case for most all of this stuff. They already got a portion of their filing tossed anyway. So it's like, come on, you can keep trying, but it's more like trying to slow down the bull, right? And with a piece of paper, and it's not going to end well for the SEC, I suspect. Anyway, let's get back to Bitcoin for a moment. And let's go ahead and check up on our little zones, our little low here that we were looking at. 15-minute it's throwing a lot of lower term time frame bearish divergence. If this structure holds here, it's probably going to pop back up. If it does start to get above 69,400 or so, we're looking at the upper second likely in play at 70K again. Above there, it's gonna, it's got to get above around 70,300. Then we're looking at it playing back up to 70,500, and this high up here around 70,800 or 71K to 71.8 rather. I'm not really looking at this as anything too bonkers. So we can throw a volume back on. We can see that it can deviate this high volume wick low. No biggie. And that's in the context of what's been going on with P. Diddler. Saying no biggie kind of makes me sad. Let's see, what else do we have here? Let's go ahead and do this. Let's throw on these horizontals. Let's get rid of the higher term time frame support and resistance because we have it pretty well memorized by now, at least I hope. Where's my triangle? My rectangle. Rectangles are not triangles, as it turns out. All right, so yeah, closing below this high zone, not really relevant. It was more about gauging pullback areas of interest for volume. So I'm not really concerned about closures below that high because it wasn't on a swing high. It was just a high volume candle. We saw high volume come in as it got wicked through. So now the area of interest is this wick low. So what you can do is you can mark it and say, look, we're probably looking for continuation. We've already seen the wick low go down below it. So we'd be looking for continuation of trend and price action to the downside should we see closures below around 68,340 right here. You could take this wick low or this wick low as the drop area criteria as well, but it's conditional. I'd be looking for continuation there. We're seeing a little bit of rejection off that high volume historical candle over here before breaking back out to test around the highs again. I need to see closures above that daily $72,000 to start looking for the highs, like I said earlier in the stream, and then kind of go from there. Now, what I am going to do is I'm going to open this up today to some questions if anyone has any. Now, I am aware that those of you in the X stream, if you are not a premium member of X, you cannot, not me, I don't have anything gated. But if you don't have a blue check mark, basically, it seems as though you cannot chat. So my recommendation is if you would like to chat with me, come on over to Landy's Crypto Corner on YouTube. You can chat here. The only thing that you do have to do is you do have to be a subscriber to the YouTube channel. Of course, that's free. Then you can come down and chat. It's only gated because I was getting blown up by promo bots and like all kinds of crap when I was streaming. So I gated it. You got to be a subscriber. and then I put some other filters on there because then bots started subscribing and trying to spam. So you can't win apparently, but it's pretty clean right now. We've got a few people hanging out in the chat over there. This is the part of the stream where I'm going to try to read. So I'm going to put on, so there's not just silence in the background here. I am going to put some music back on. We'll keep the volume a little bit lower. Yeah, I'm using the keyboard for this. You can probably hear it, but I'm also reading chat. 15 minutes starts to paint one of my favorite long scalp setups. Yeah, that's actually what I'm looking at. I'm already positioned though. Personally. Oh, shit. Did I go way past what I wanted to do? I think I did. Sorry, lowering the music back down. Wasn't paying attention. See if that's a good mix between background, Landy still hear music, and my voice. So let's see here. We've got Spin, we've got Bobby. Let me get over into that chat actually and take a look. Hi Jedi, hi Bobby, hi Spin. I know that there's other people here just not chatting currently. We do have some more filtering in right now as well, probably from X so that they can chat hopefully. I guess, Jedi had to go, but he said he's going to pause and catch up later. Bobby says, how do you scale a long entry here, build your position, quote unquote? Like entry point size, not size number or quantity, but size percentage of entries. So it depends on my objective, right? So I'm not enamored with the 4-hour look right now. So this would be a pure scalp play for me that could have potential later, and I've already filled my scalp. So I filled my scalp around this low side structure after being hit 3 times. This is what I have filled basically in and around here. Now in terms of lot sizes, not really going to get into lot sizes, but I'll use some examples. Let's say you've got, we'll use $10,000. So let's say it's a scalp, and the scalp is going to be a $10,000 scalp. Realistically, if I'm not confident that the move to the downside is over, I'm not going to enter. Okay. If it does hit my zone of interest that I am looking for, I can maybe do 25% of the position and start filling it on each subsequent tap that holds, right? And then you got, either a third or 25% of the position on, and you can do fills that way. But in general, you want to take the reversal on a confirmation. So like right now, if it starts to reverse, we're looking for, this is still counter trend trading right now, right? So this particular setup that I'm doing is a counter trend trade because it's headed right back into the daily basis band zone between there and the week and the monthly and well, every time frame wick high at $69,000. So this was already an area of interest. That doesn't mean that it's going to be a successful scalp. So some of that move initially down has already played back to the top side support. So one of the things that you can do, that I often do is like, okay, I saw the initial wick down. I didn't touch it. Even though I saw the volume, I wanted to see the retest of that volume. I also wanted to see the retest of the lower second standard deviation. So my fill came in here. Now, typically what I'll do is if it's a scalp, I'm filling 100% of the scalp. Now, I also have a plan to turn scalps into swing positions. So there's 2 different schools of thought there. Now, if I'm just confident that this is going to go much further down, there's no reason to build it here, right? So I'm not that confident that it's going to go much further down, so I'm giving this scalp room to build into a swing position if need be. Now, because we already have support and resistance marked on the chart here, I took the fill here, and as soon as we get up to the overhead resistance, take some profits, right? Pay yourself. Comes back down, and if it holds, you size that position back up to its original size. If it were to outrun, you just hang on to the position, take profit at each level that you're gonna, that you've identified. One of the big things is, if you look left, that's this low side structure right here, right in the middle of this zone, right in this low, higher volume area that we see here, right? So we've got higher volume kind of double bottoming on this triple bottom setup. But that just sent it sideways and up for a little bit. This hasn't even begun to reverse. In order to break trend, this is where you'd really want to get into confirmation trading. This is going to break trend. It's got to get above 69,400, right? And then come back down and make a higher low. The higher low is typically what you should be taking if you're going to trade with the trend. Now, if this were to drop, because I am prepared to, personally, I am prepared to, on the other side of that, you can take, I like to fill scalps 100%, but you can fill scalps at 30% or 33%, and wait for the move if you're getting in early, because you're like, oh man, that's big volume. What if it just goes right back to the top? Well, if you're not totally confident in that, you could fill, a 33%, 33%, 33% on a particular move like this. I don't think it's worth it. I think you get in, if your invalidation is hit, that's your stop loss. Eat it, find the next level that you're confident in. In this case, I'm willing to build this position out. I'm willing to build this into a swing position. So this scalp that I've taken here pales in comparison to the liquidity that I will add to this position at the subsequent higher term time frame areas that I spoke of. 65 to 66K, I'm interested. Below there, 62 to 60 to the upper 63 area, I'm interested. Drops that into the monthly from 58.8 to 61.350, I'm interested. And especially interested if it drops down to that $53,000 to $50,000 level. If it were to just be really catastrophic for the bulls, that's when I'm going to get really interested, and that liquidity is really going to start rolling into that long position for a giant swing position, right? That's where you always keep liquidity, no matter how big you're willing to go. You have a set size in mind. I'm always on the more conservative side when filling positions, and I don't use high leverage. I use low leverage, even on scalps. I don't usually go beyond 3 or 5x. Again, none of this is financial advice. This is purely my personal views on how I position. But it's all based on the conditional analysis, right? So all of the conditions that I lay out in my analysis is what I base my trades on. And in this case, this is a counter trend trade on the 15-minute, right? So it's a counter trend trade on the 15-minute. 4-hour trade is also down. So we have trend down on the 4-hour, the 3-hour, the 2-hour, the hourly, so on and so forth. So this is a counter trend trade. I do not have high confidence in this trade. So what I am looking for is, because it was a conditional entry, because it met the conditions that I was looking for and stated yesterday, I'm only opening a scalp here with the objective of building it if it does fall further. But I'm also willing to let this scalp go if I'm not confident that it's going to be able to break the highs and break structure to the upside over a longer period of time, because a scalp by definition is quick in and out. This is almost a hybrid scalp at this point today, because I did not completely close the position at resistance. I did take a little bit of profit to cover for the entry fees. That would be your, in this case, I had a maker, not a taker, but you still pay fees on it. Also, there is the funding fees, so I take a little bit off the top of the positions for that. I set my stop loss slightly below So if it's going to hit it, it's going to take that out, but I'll still keep a little bit of profit. It was basically a free position, kind of like a free bet. And I'm willing to let it ride right now. I'm also willing to build it out. So in those, if I'm going to walk away, I'm going to let the stop get hit, but it's also going to fill orders right under it, right? So I placed a stop there to kill the position, but fill orders right under it. And because I don't want to be out of position, I'll also get notifications, all that good stuff, because I'm willing to build below $69,000. I mean, the zone is 69 to 65. That has not changed. More bullish above 68 to $69,000, but the zone is 69 to $65,000. Loses that, we're looking down. Between the two big zones, the wick highs from previous cycle to the closing highs from the previous cycle. And there's that no man's land in between, but more likely it would go hit the monthlies down there on the close. And look, like I'm already in swing position, so like I have the luxury of not really caring, but I'm a day trader. I trade to make money on a daily basis. I have a set P&L goal, but I also follow a very rigid risk management framework. And this is not something that I can give you, because your risk profile is going to be very different than my own, right? So understanding your risk profile is something that, we'll get into risk management stuff. We probably should in terms of best practices, but everybody talks about risk management. So you can really go and research it yourself. If you understand technical analysis, you're going to understand what they're saying. I don't do anything different really than most. I just tailor my risk management profile to what I'm willing to put on for risk, and that as related to my account sizes. So, I'm not willing to risk like massive amounts of money on a counter trend trade. Like, it's just like, why? It doesn't, unless I'm specifically building that position. Like for a scalp, I'm not going to go like 100x. Let's throw down like 5 Bitcoin on it. Like, no, let's lever up 5 Bitcoin at 100x so that we've got millions of dollars in a trade that's going to liquidate me. Like, no, it's silly. And you're likely going to see a bunch of people get freaking wrecked if this breaks down further. You just go watch the liquidation charts. Like, it's probably going to wreck a bunch right below these wick lows here on the 15-minute. And my bet is it would wreck them and then pop right back up into this little low structure here, at least for a little bit. That's just a bet. I don't know, obviously. But judging by the high volume and then dying volume, if it moves through this area with low volume, there's a problem. There's something else going on. That means we're looking probably much further down. So that's not my first take on this. I would expect to start seeing volume come in as soon as it starts getting down here and below here, more specifically. So run this low again. Quite honestly, if it starts tapping on this more and more and more, it's more likely going to break down. It's going to tap the liquidity there. People are going to be adjusting their positions down to do exactly what I'm going to do. And that's likely build this out into a swing position. But this scalp pales in comparison to the swing position I'm going to put on. So like literally it's going to pull my entry down basically to where price is. And I'm also, I may have failed to mention this, but you mentioned the long side of things, but I'm in a short position right now as well. Now, my short position was based on some lower term time frame stuff. So short scalping, pretty easy. The expansion to the top side here. Now, when you look here on the 5-minute, this faked a lot of people out just prior to one, just because it was just prior to market open, I opened a short. Now there's that, I do not suggest doing that. But when I see run-ups like just prior to market open, you're almost guaranteed to see those fail. Same with downside moves, although market participants in traditional markets are going to be like, oh, hey, just let it keep going down. This swing, though, in the lower term time frames, like on the 5-minute, this 5-minute candle rejection right here was pretty obvious when you start moving down the time frames and you start getting into, yes, I do use the minute chart. We saw the move up, and we saw the move up in volume. So here's the fun part. Moves up in volume, and then right around here, we had like it die in volume on the minute chart here. Now, keep in mind, this was just prior to market open for the New York session. We get a nice bit of volume on the higher high here, and it comes back and it tries to expand up, but it immediately expands up and then rejects on lower volume. And then when it goes back to retest here, it hits the high volume, loses the low at the same time, and then boom, 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 down. And then you get your minute chart high volume bounce here to the next, the marked candle there, which set the low. Now you can see when you look at the minute chart and you evaluate this, where did this bounce? This bounced right at that high volume 15-minute candle that I showed you. So that was the wick high of that candle, and then it closed on the minute chart inside of the close of that bullish candle that was on high volume. That sent it right back up through the lows. This zone is the lows of the current consolidation range. You saw it dip down, tap and test now this high volume area, and then kind of trap in here. And you see right now it's rejecting what? It's rejecting that wick high that's historical, also this really high volume minute candle that came into that historical wick high. So we have two areas of confluence there with volume. And if it can recover above there, then we're looking for it to probably mark itself up to, in the 69 to 69.5 region. It's not a guarantee, but we keep getting high volume in the same areas around this structure here, which was that 15-minute bull candle on volume that broke out above, that got priced to break out back above $69,000, pushing it all towards 71.8, almost 72. So yes, when I am positioning in a scalp, I show you guys often the 4-hour, 6-hour as it relates to the 12-hour and daily. And then when I go down, we're looking at like the 1 and 2 hours that relates to the 4-hour to get an edge there, and then look down to the 15-minute to get an edge on that hourly as it relates to the 4-hour. But when I'm actually positioning, I do use the low term time frames. I mean, I don't mess around. I've got orders to fill, so I want to know what's happening. Now you might be thinking like, oh, Landy, you're looking at the Coinbase chart. How are you leveraging trades on the Coinbase chart? I use the Coinbase chart and the spot chart as a reference for my exchange chart. So and you can see how this is rejecting some of those higher volume areas. And again, it is one of those scenarios where you got to understand what your objective is. Okay. As I stated, I'm willing to build this position out into a swing position. I've also taken a bit of profit on it, and I do have a stop in just in case I change my mind or walk away. So, if I'm not here to build that position, I'll let it hit the stop, and then it's going to start to position lower at some of the key levels that we just talked about on the higher term time frames, right? So that's okay. I'm okay with that. If I'm sitting here, I'll make that decision live. Right now, it's still running. And it's funny because one of the things that I recall with a lot of new traders that are even here is the panic that starts to set in, like, oh my God, it's going to fail. It's going to fail. And like, if you're planning your trades the right way and you're not using your liquidation as a stop loss, you're going to be okay. Trust me. But turn the damn leverage down, because the leverage will eat all of your available liquidity hitting stop losses. So if you don't have a big account and you're leveraging up to get the size to make what you feel is enough for you to take, you're thinking about it wrong. What you got to do is you got to trade a little bit more. Like I've said before, $1,000 at 3x gives you $3,000. For every $1,000 that you're leveraging, you should have that amount of available liquidity behind it anyway, so that you are only leveraging a small portion of your liquidity. And then on $3,000 on scalps, you can make $100 to $500 a day depending on when you're getting in and out of your trade. And then before you know it, you've got more liquidity to do 3x leverage on, and you update that criteria. I've seen people, I've helped people, I've done it myself, double accounts doing that way in a matter of days. Like, keep doubling, and every time you double, it's just more and more money or liquidity in your account, and then you don't have to even worry about going that high leverage. That takes it right off the table, right? But you got to be methodical, and you got to understand the reasons why you're doing this. Are you doing this because you're trying to get as much money as quickly as possible? Probably going to get wrecked. If you take a couple of weeks and you build out an account just using $1,000 on 3x leverage, you'd be so shocked. But it forces you to really pay attention to what you're doing and why. You can't just go, yeah, I'm going to use this and then I'm going to get in and out right here because I made my $200 or $500 profit on my 125x long or short scalp. Like, look, that's not the right way to build. You're more of a gambler from a psychology point of view, and you're probably going to, if you don't get wrecked on the exchange, you're going to wreck yourself in other ways. Just saying. Like, it's very difficult to maintain that. You can have a really good streak and then a couple bad ones will take you right out of the game. So just be careful. I always, I have a degenerate chat. I've got, we talk about chat, degenerate chat is all people being degens with trading, which is gambling, right? Because even if you're right about direction, a random wick can take you out on a specific exchange that doesn't even occur on another exchange, right? So you're subject to liquidity on that particular exchange, even if like it's going up somewhere else and it never even hit the area, but it takes your stop or hits your liquidation. So understand the rules of the game are pretty simple. It's make money or get wrecked. It is kind of binary on these Mickey Mouse exchanges that are very widely available. And look, there's probably not going to be anything other than high leverage Mickey Mouse exchanges for this type of trading. And at some point it will go away. Likely you're going to see a lot of liquidity move over to options if and when options are approved for the spot ETFs. Because one, you can make a lot more and it's still a high leverage environment trading options. Because you're trading 100 shares for pennies on the dollar. You're trading, potentially tens of thousands or hundreds of thousands or millions of dollars for pennies on the dollar. And that is where you can make some freaking serious money in options. I'm really excited for options. So I don't talk this kind of stuff with you with options and stuff like that. I'm excited to talk to you guys about that stuff in the future. This is all a crypto focused channel, so it's really only Mickey Mouse high leverage exchanges that may or may not even have your coins in liquidity there, and they're just using USDT to flood liquidity for that particular pair. without actually having the Bitcoin to back it. I do suspect that many don't. I do suspect that many are locked on liquidity locked on their Bitcoin on the back ends, and that's one of the reasons why they rate limit how much you could take out at a given time. It's usually not because they don't want to run on the exchange, right? But it's usually not that. It's usually because they're rehypothecating that shit over and over and over again. Even if it's not from the outside of their exchange, they're rehypothecating it inside the exchange anyway to support the other contracts for those particular coins. So most of them have way less liquidity than they claim they do. That's one of the reasons why you see exchange. It is interesting now because people are sending coins to exchanges because they, levering long and short, so on and so forth. But you're going to see likely there's probably going to be some exchanges that go under during the massive move to the upside that I do believe is coming very shortly. And when I say shortly, context, we're probably talking weeks here if it doesn't break out to new highs this week into next week. We're probably looking for things to consolidate a little bit more long form, but it's conditional. It breaks the highs. We're looking 75, 78 to 80 pretty quickly thereafter if it can get above and close above 75 and 78 respectively, at least on daily and higher term timeframes. Then we're looking 80 to 85 roughly, but probably this week it would be capped out. If it did a run like that at some point this week before the weekly close, I think it would cap out somewhere in the low 80s. And then we come back to it, could very easily update and hit those mid to high 80s as well, maybe even 90. That is really all conditional though. It's got to close above 72. It's got to close above the current all-time high at 73,800 or whatever, and then start marching on through 75 to 78, right? And to the opposite side of that, you could still see a downside move, right? Coming into the halving. Who knows? Maybe back to the monthly supports. That's really where I'd be looking, is right back to the monthly supports where the current lows are coming in for this particular range. Around that, 60 to 61.5 area, somewhere around there, around the monthly. And only if it started to fail at the 58.8 monthly would I start looking further down on closes. So, I mean, I do think there's going to be exchanges that have issues because coins are going to come off exchanges. Look, you're going to have a halving, and then you've got these ETFs sucking up all the coins, along with regular Bitcoiners scrambling to take their coins off and make as much gains as they possibly can, take them off and gamble them on ordinals or something, right? And or move them to cold storage like they should be doing. Of course, I say this having, it's a small portion of my portfolio invested in ordinals, but that's only because that's my degen play this cycle. We got shit coins coming to ordinals, might as well get on board because I'm gonna get on board with some of the shit coins anyway. I already got my altcoin bags packed. I'm trading USDT there because USDT is horrible money, horrible coins that I don't really want, so I'd rather trade it for more of those horrible coins and then buy Bitcoin with them. All right, so Jedi narrating his speed run through my analysis here. Probably not needed, buddy. You can just let me know when you catch up. But thank you for noting that you are running through everything here. Baba's here. Sam is here. Hello. Mining. Oh, they can't see you. You should probably jump over. Dude, you should probably jump over to the YouTube. We're not going to do mining today. No, this is our analysis stuff. It'll be a dedicated thing that we'll talk about mining. We're in the Q&A portion. You can ask me something about it, but we're not going to get like deep into mining. Also, I want to bring on some guests that have experience with running nodes, and maybe I haven't asked some of them if they have mining experience, but there's quite a few people that I'm meeting that are very, very good in terms of understanding the technical side of things in the ordinal space. So I think it'd be good to have others' perspectives on it as well. That's going to be on Discord though first before I do any kind of a live stream or video publicly. I want to work out the kinks of what I want to say in the Discord with you guys first, and then we go public, because other people, it's an introduction to me, and I don't want to sound like a complete nutcase like 99% of the time, because running a node is something that I do strongly believe that everyone should do. You can just use old computers and run a node, but you do need the storage, right? Like, that's the big thing, is the storage, and storage is fairly cheap now, to be fair. So I would recommend 2 terabytes. That's pretty standard. I would also recommend, if you want to run a node and you want a kind of turnkey solution, FutureBit.io, man, they got some great stuff. Sorry for the cursing. There's Bitcoin going up. Oh, somebody put in a big order. Gonna try and push that zone. Let's look at the minute chart, guys. Let's see. All right, push the top of that zone, and what did I tell you? If it can close above there, well, it's probably gonna mess around here a little bit. This is a little bit of resistance at $69,000. Nice. And then above there, you've got 69,162. I was hoping it was 69,169, but it's not. Above there, we can look up to 69,269 now. Wow. And then we can start targeting somewhere around the mid $69,000 area, and maybe higher. But you can see that Landy does not pick zones randomly, right? It's a volume-based area of interest, and you see what's happening right here. We saw the confluence on the way up. It was confirmed on the way back down with the higher volume into this zone. Deviate through it, now finding it as resistance. Of course, this is a minute chart. If it breaks it, it breaks it. Awesome. Way to go, bulls. Here's your flowers. Good job. It's not like there's a lot of bears left in this market, so your job isn't too hard. Sam, there's a heart next to your name, so the Apollo for BTC mining Bitcoin, it gives you per year. The calculations are going to change, right? But it's based on the hash value, like how much, you can run that thing. I think it's running like six on the low side, 6 terahashes to like 10 or 12 or something in like its overclock mode. You'd have to go check their website. And it's like 400 to 600 watts. You'd have to look. I think they got power. I think they lowered the power draw and raised the hash rate on that thing. I mean, the 99% of the miners, even the little pleb miners you buy, like the I can't think of it, the bit axes, they're all just harvesting ASICs from ant miners in most cases, right? And then they have custom boards that they solder them to, and then usually some other custom chips and stuff that they're using to for network communications, and pretty standard stuff for storage and power control and draw and stuff like that. And then package it all up, and you've got a mini little ASIC, right? Got on those bit axes, you got one ASIC, right? Out of most ant miners are running many ASICs, many hash boards with many ASICs on them. So there's calculators and all kinds of stuff, but to be quite honest, you're in lottery mining territory, even in the 20 terahash territory, especially coming into the halving, right? So where's money going to be made in Bitcoin? It's going to be on the transaction fees over time, right? Because winning a block or finding a block is going to become that much harder to do, and it's not, I guess it's not that much harder to do. It's that the reward for it is difficulty goes up and down, the difficulty adjusts, but It's more about your reward for finding that block is being halved at the halving, right? So where's the money made? It's made on the transaction side of things. So, no, miners aren't going to argue with like ordinals right now. They're making a freaking ton of money on it. They're making up what would be considered lost on the fee side of things right now. Does that mean that fees are gonna have to spike? No, not necessarily. In fact, I think that the network's going to get more efficient through layer 2s, and then fees will actually remain pretty consistent on the base layer. And you're going to see more and more miners running side by side, core and layer 2 infrastructure for that extra income. You're also going to get advancements in power, and when I mean power, I mean both power draw, so power draw coming down in terms of the joules pulled per terahash, and gigahash. You're in terahash and exahash territory, right? I think that you're also going to see, you are going to see those chips become more powerful, those ASICs become more powerful, and Jedi's over here talking to himself because he's living in the past. I talked about that already, and it doesn't matter. Yeah, they're gonna SEC is gonna lose that case, buddy. I know they're just trying to go after them for securities trading shit coins, but it doesn't matter. They're gonna that Ripple case did set precedent for a lot of stuff, and I actually fall on the side of shitcoins are securities. So, in fact, I fall on the side of a lot of these Bitcoin tokens that are coming out being securities as well. And I am not viewed favorably for that take, but they by definition are, especially now that all of the pre-sale stuff from ETH is moved over to Solana and is now moving over to Bitcoin. Now the way that you can get around that is it's not a pre-sale. I mean, even token gating or whitelisting, all of it technically, like, I'm not going to get into it, and like, this isn't an argument. It's my opinion from my very long history and understanding the industry. I would tell you that it's even whitelisting and getting a certain select group of people in, they become primary investors even on a free mint because they are investing their time, they're investing their money into network fees. Even if the original deployers don't make money, they're probably minting too, and they're going to make money along with that crew, or in some cases lose money. But it's still a security. It's the way that securities operate in terms of investment and open market trading versus closed market, and like private versus public, and like all this other shit. So, there's a big debate there, but what can the SEC do to stop it? Nothing. Are they going to go over? They're going to sue the big guys, but how are you going to go after? Are they going to go after every DAO? Good luck. Have fun. Like, this shit will just keep popping up. Oh, more and more of it will just keep popping up everywhere. It's like the weeds that you can never get rid of in your lawn. Like, you can come and you can nuke the whole lawn, but then you're cutting your nose off to spite your face. You got a lot more work cut out for you then. And quite frankly, they don't have the resources, and they're going to lose. So, but I actually agree with what they are saying about the shitcoin casino that is every single exchange that sells shitcoins, and even the shitcoins coming to Bitcoin. I actually agree. Now, why isn't Bitcoin a shitcoin? because there is no DAO, there is no centralized organization running it. It's the actual network code determining, and it's an optional buy-in, and there is no reserve, there's no team behind it that is a centralized entity controlling it. There was no pre-mine or pre-sale. And it takes work, it takes investment from companies to put into it, but those companies can then securitize themselves on the open market to then go and perform mining operations or node operations or development or whatever else. And in many cases, they're creating securities. So, it's a battle of those who want a free for all versus those who want total control, because there is no real in between. Everyone that's really against the SEC wants a free for all. And everyone that, because there is no like half-step measures. There's like, we're going to take care of this portion, but not this portion. They want total control over it. They want to bring it all under wraps. You can trade Bitcoin long, short, only through the SEC website. No, I mean, I'm just kidding. But I think you understand what I'm saying. I don't think there's a middle ground there. And I happily participate in all sides of it. In the shitcoinery side of it, in the filter crew side of things, because I do understand the way that the network works, and I understand what's coming. I understand the load on the network. I understand that my hard drive is filled up with all of the things that I'm minting right now on ordinals. So, I understand the implications from both sides. I don't care. I'm in it for more Bitcoin. I'm in it for having fun, making friends, and educating people on how to do technical analysis, and eventually, I guess, running your own nodes, and then probably trading options. I mean, that is going to happen. When options are live on Bitcoin Spot, we are going to go over it. I don't think it's worth it now. There's not any really good options platforms, unless like there's a huge demand on my channel or my community to like, we all want to trade traditional market options now, which I doubt that's coming anytime soon from you guys. No, it's just a lawsuit moving forward, buddy. It's a filing. And it doesn't matter. Like, they're not going to win. It's a nice thought, though. It's fun. Gives us a little dip back into the zone. Maybe it'll break down. All opportunity, in my opinion. Not financial advice. Do your own research. Bitcoin's probably going to go to zero someday. No, in fact, it will go to zero. It's going to go to zero Bitcoin mined someday, because all 21 million Bitcoin will have been mined. Finite asset. Hardest money on earth. Yeah, it is funny it's interesting to see the ETH maxis and altcoin maxis coming over to Bitcoin right now, because it's kind of blowing their minds. Yeah. Also, I think a lot of them realized they got burned by proof of stake. Like, seriously burned. Yeah. Now, I do not like that a lot of websites call Bitcoin transaction fees gas. I get it, but I don't like it. It annoys me. Yeah. Which part did you say you wanted to clip there, Bobby? I can clip it out for you. I have a high quality version. Oh, no. So, do I trade the 1 minute chart? Absolutely not. I use all of the analysis tools that I discussed and all of the conditions that I discussed earlier. I use the minute chart to define my entry and refine it, basically. Typically, I am on the exchange books, which are the live orders, right? So you're not necessarily seeing the market orders, but you are seeing you're not seeing the market orders. You will see them start filling those limits, but you'll see limit orders, and you'll see the live balance of orders coming in, including the market orders, but then you'll get a list of all those limits coming in. And I'll have it on like the minute chart there. Some exchanges allow you to go even lower. I don't think it's worth it. Minute chart's fine. Just to refine my entry for that particular exchange. And then also, like, bro, is there liquidity here? Like, I don't want to mash, usually I'm limiting in and out anyway, but I don't want to mash the market button and get a bunch of slippage, so. You could, if you want to blow out the other side, if you search the order book, but usually you're not going to get that robust amount of depth unless you are, some exchanges will offer it up, but it's a little bit more rare than not. Yeah, this is a minute consolidation here, right around this support zone. So it does begin to fall apart. We're looking at some of those lower targets we talked about. You can see that the volume came in right into that resistance, which if you had to pinpoint it, that 68,893 number there, or no, let me look. Yeah, no, 68,893. That number there is the highest volume traded price for this little area anyway, because that was the initial move up back here, right? That was the highest volume move up. Then we saw, like I said, the highest volume come right back to that area, so it's like an inflection point. So it's not abnormal to see it reject. It's more bearish, obviously, to come back down at least in the range. And then if it starts losing 68, 389.95, then we're looking probably 68K and down into the mid 67s, upper 67s, and then possibly into some of our targets that we talked about earlier in the stream. Right now it's just consolidating, and we are seeing, not insignificant volume right here on this little short form consolidation. If you're going to look at this, you're going to get pattern traders going, this is a bearish channel structure. It's a rising channel after a downtrend, and it's going to break down, and it's going to give us our targets down here. And it's like, okay, well, instead of doing all that jazz, how about we just pull a fucking trend fib? Excuse my language. Wow, I'm such a potty mouth today. Yeah, what was I doing? I don't remember. Oh yeah, this shorter form move, like on the minute chart. You can pull a trend fib here. Let's get rid of these bands. They're not very helpful when we're on the minute chart. I mean, you could take this initial move down and you could actually trend fib it, and it's probably going to line up. I mean, you could also take the breakdown too, but Oh, where's the 618? Oh, well, the 618's right at that wick. So if you're looking for 100%, we're looking at $68,000. Hey, what did I just say earlier? Looking below there, mid to upper $67,000 area at the 1272, 1414. Below there, the 1618 to 1786 in that mid to low $67,000 area, which is areas we talked about previously already in terms of like order blocks and stuff like that. You're looking further down than that, you're looking into the 2 spots and past 67,200. I think what was that order block? It was like the low side wick was at like 67 something to 68 something, the upper 68 region in the 272, 2414, 2618. So yeah, there's confluence there, but back above the 0, it's invalid. And again, that's coming in at that number that just got rejected at 68, 893.02. So how did we identify that area of interest? Volume on the 15-minute chart. Yep. No, I mean, if you dig this stuff, like, subscribe, follow, all that good social media stuff. This is basically all I do online. I mean, outside of like the occasional retweet so that I can get a whitelist on or no project even. Yeah. I have no idea, dude. No, we've got a few people over on X. I think some of them have come over to the YouTube. Yeah, the whole not being able to chat thing on X is really super frustrating. Because it's not like I have control over it. I mean, I could go look in the dashboard there and see if it's a setting that they've added so that I can control. Like, hey, people who aren't blue checks can chat or something like that. That would be nice. But as far as I know, that is not something that is available to me because half the time I go to log into the dashboard and that thing is not working. The 15-minute fib? Oh boy. Let's do the 15-minute fib. So if you're going to do the 15-minute fib, take it from this high, swing low, swing high. It's kind of in between the 382 and the 50% here. 50% is coming in at 68,250. 618 is coming in at 67,800. Just looking left, just so happens to be this consolidation high zone over here. Below there, you see the 888, 786 area coming in, and that's 66,800. That's that order block area right there. So big zone. If it starts to lose this one spot, then we're looking for continuation. The one spot just so happens to be at 66,374, the very bottom wick of that order block consolidation area. Then we start looking down to $65,000, kind of bracketing in and around here. You can see how well this fib lines up. No fib here to catch this high. We have the 1272 at 65,400 or so, 1414 at 64,800. Start losing this area, then we're looking back down into the 63 to 64s, and then so on and so forth, right down into that monthly support area. Would a trend fib like this be good? I'd rather pull it on the hourly once I see good structure. If it is going to continue trend to the downside, probably more appropriate to pull the prior swing up here, so you can come see. But the wick through kind of invalidates it, so I would wait for a new one. Yeah, the 15-minute one would be fine for now. Hourly momentum is pivoted at 69,690. Gonna update in 21 minutes and 54 seconds. Is it likely to throw bullish divergence? Yeah, I mean, it's got bullish divergence, hidden bull div from the structure back here, which is, as long as it's trading and closing candles above around 66.8, it's fine. it will throw bullish divergences. Right now, it's just not ready yet. If it can hold this area, it'll avoid testing 67.5 to 67.8 or so. Yep. No, it's pretty simple. You can make zones. Just take your ray tool, snap on the highs here. You can take like even this high here at 67,200, but there's not a lot of volume there. Volume actually came out after the on the retest of the wick high here at 67,750. So I'd use this as a zone, and then I'd bracket the consolidation, give it some room here. You might even be able to just find some confluence over here at some of these highs, right? But for the most recent move, I'd be looking right here, or you can go and just scroll back and use some higher term time frames like 4-hour highs up here. But yeah, that's kind of how I would do it. And then you can just get the box tool and you can fill it in to make a zone if you want, or just leave it as horizontals. You can do horizontal rays, or you can do the actual horizontal lines, which are just going to go all the way across. They're going to cut all the way across. And one of the things that you can do if you're doing it on the lower term time frames first, you can look left and you say, oh, you know what? I think that this high side structure that's being tested right now is more important. It's like right on it. If it loses that, then we're looking here. And then we're looking to this stutter step. And if that area is lost, this has confluence, by the way, with this over here. So I've identified this area because I already know it stopped there because of some of the highs over here. And that's one of the primary reasons why it was rejecting. If you just happen to look, you've got order blocks over here. You've got the low side structure and the wicks over here. It was coming up to an area of resistance. Had lower highs. We had a big lower low, a lower high to higher low structure built in here. So good inflection point around 67,366. If 67,800, 700, 800 is lost, which is all just this area right here. So I'm going with the more immediate move. You don't have to. But I look for multiple points of confluence. That's really what I'm looking for. Yeah, high degree of accuracy. That is something that we have experienced here for a very long time on this particular channel. For those that have hung out with me for more than, some of you guys have been around since 2021 when I was screaming about distribution into reaccumulation, and that we were likely going to see the reaccumulation result in another move back to the highs. Some of you joined me in listening to me and hanging out with me right around that time period when I was like, 53,800 is going to fail. And if it fails, or the condition is 53,800 or 55 something, I don't remember the first top in 2021. It's going to go down. Here's the areas of interest. And then stuck around for the Wyckoff reaccumulation on the daily, hit the spring, had that beautiful rundown and into the 40s, and then popped right back up, 40s, high 30s, and that beautiful pop back up to the new all-time at 69K. And I said, there's a big bearish divergence and momentum divergence, and everything's turning against things. You might want to get out. Now, granted, it fell a little bit short of our $70,000 to $72,000 zone at 69K, but once it started to turn around there and breach the same areas, 55 or 53,800, I don't remember. One of those areas we're like, yeah, it's over. Probably a bear market. Let's start tracking it on the way down and defining criteria for where the macro low is likely to come in. Do I think that there's any macro high coming in here? No. No. Need to see the quarterly turn down, and the quarterly hasn't even gotten its cross back up yet. We'll save that for later this month. Going into April, we'll look at the quarterly even. Specifically on Friday, we're going to talk about it. You like the minute chart? Okay. Cool beans. Yeah, I mean, it's holding this little zone that we picked out. Yeah, I mean, you can just scroll back and look at how I created the zone in the very beginning of the video. We didn't tailor it to this price action. It's playing within the support and resistance that we have identified based on volume. It's kind of how you can deconstruct the order book. You don't necessarily need the order book to deconstruct it using price action. It's pretty easy to do, actually. Now, if you wanted to get a profile volume for the highest, or the value at which the most Bitcoin was exchanged, you can do a fixed range value or fixed volume range tool thing. God, I can't talk. What am I looking for here, guys? Fixed range volume profile tool, or you can do anchored volume if you want. That'll give you a profile for like the highest traded or the most traded price, right? So if we were gonna do like the hourly once it get down here, or even this bad boy right here, you just go over and grab that, because that's how we're defining it. So this candle over, and you can see that the pivot's actually up top. So it's not quite where we have things, but you can see the value area low, or the volume area low if you like, also known as a value area, is right there at our top side that was lost. So it's regained. Like I said, we're looking like back up to 70, 71 and a half, maybe even 72 to go test things. But pulling it all the way over, you can see that's pretty easy to identify. If you wanted to modify this and say like, okay, well, we know that this was the historical volume candle on 15-minute. We already identified this was the highest volume candle, and then lots of volume was traded in the highs here, right? Then you can, if you wanted to modify that, you say, okay, well, let's get rid of that and let's see from here over, where do we have a pivot? The range pivot is right at the bottom side at, just under $70,000 at 69. Yeah, basically 69,750. And then you can take the move down and you can find that too, to see like, okay, on the move down, where's the point of control or the highest, the most traded in terms of volume, in terms of price, and it's been at $69,000. Go figure. It's going to have confluence with the monthly. I mean, the prior all-time high at 69K is on everybody's charts. It's in every trading bot. It's in every, so not too difficult. It's also splitting this particular range pretty evenly. Top side volume area high, or value area high if you like, at 69, 600 or 700 actually. So it's almost, 700. So you get a profile volume going as well, and like it plays fairly well with it. I don't really need it. I taught a lot of you guys this, or I didn't have the tool for it for a while, because believe it or not, TradingView was a little new to me for a while, because I didn't really use it in terms of having to explain it to other people. It was more about like, oh, where's that tool? Okay, there we go. That's how I use that tool here. Using other trading platforms where a lot of this stuff is already default or built in or on a different chart. So you just go and you look and you say, okay, that's right now updated to, this is the pivot, basically, without having an on-chart indicator and stuff like that. Kind of from the old school way, still widely used. Although TradingView is starting to be adopted into some shops. Depends on their tools, yeah. A lot of the tools are going to come from brokerage partners. So, I mean, just about everybody uses Bloomberg Terminal. NASDAQ has one, yeah. I mean, that's for tracking a array of things. But if you're hooked into NASDAQ and other things, there's different systems and platforms. Yeah, not relevant. Most of you guys will never see it. Oh no, you probably no. You've probably seen, like, there's guys who, you know, either reporters or maybe they're in industry and they'll post things from Bloomberg Terminal. But a lot of that stuff has to be updated after the fact, after market closes. So it's data aggregation primarily. Yeah, it costs a lot of money. You get institutional discounts, but take or buy sell ratio. No, I didn't actually talk about that today. It's neutral, I bet. Yep, it's neutral. We can look at open interest while we're at it. Yeah, still a little high. It's higher highs, higher lows so far, while making some lower lows and lower highs. So, you know, is there a bit of bearish divergence here? Absolutely. Could it run down? Where are we looking? 68K. To around that area at 67.7. So on and so forth. All the areas we just talked about to the downside. Doesn't really change anything. At least not significantly. Nice bullish divergences building all the way through. Could it deviate and then come right back in? Sure. Hourly is 10 minutes to close. I mean, that's an ugly candle up there. The Darth Mauls usually get filled out. And just be aware that it's got to break down, right? So on the 4 hour, for instance, this is an ugly candle. We're not seeing two consecutive side by side. It ran the highs, and then, you know, in general, you're looking lower. Stoke is down on any closes below 70,600 or so. We even have a bearish cross on RSI under the moving average there. This gave this away like 9 o'clock my time last night. So back over here once the high was locked in. Saw the momentum shift as well. So I mean, pretty much everything that was going to rise more than likely was going to get sold into unless it broke out, closed up there. So one of the many reasons why I took a nice scalp short. I mean, I already took a scalp short and closed it yesterday, and then took another one today. Yeah, 6 hours down, 70,000. This can all flip very quickly. So I mean, it is pressure down. I mean, even on the 12 hour, like we said, initial cross to the downside on any closes below $69.03. Nice. Yeah. I think that's gonna wrap it up for me. Unless anybody's got any burning questions related to the things that we talked about today, in terms of analysis and all that other good stuff, I think that just about does it. Yeah, I gotta go eat some lunch. It's a little past lunchtime for me, yeah. You know, on the daily, could a higher low its way up? As long as it's above this last higher low, yep. 63, whatever, 63,814 to that wick low at 62,258. As long as it's trading above there, it can higher low its way out. Not the most confidence-inspiring candle setup right now, but it's also not looking anything more than consolidation at the moment. I think Solana's probably due for a correction. We'll take a look at it on Friday and give you a preview. And when I say correction, I mean longer form correction. I think it's due for one. Could it be setting up for way more coming into next month over a longer period of time? Yes, in fact, I think it is, but it's not, Yeah, it's due for a correction, and it's correcting right now. Got a nice correction down towards the basis, rejecting the upper first. If it starts to lose the basis at 174, again, we're looking in the same areas we talked about last time, 155 to 143. Holds that area, great. Starts to lose that and lose the lower second. Looking for this to round trip its way, shave off, literally cut this in half, 50% move down into the $100 to $115 range. It's not my first take on what's going on though. High level consolidation, could have dipped more if it loses the low at 162. We're looking for it to dip to those areas we just talked about. Mid 100s, loses that, we're looking mid to low 100s for a steep discount on Solana for a little while. It needs it. This thing has been cooking. Got bearish divergence populating there, head and shoulders on RSI. That's where you can play some head and shoulders games, inverted and regular. Weekly, overheated. It gets where the basis is, right around $100 to $150. So it looks fine. Around $150 though at the upper first, likely to be a bouncy area. We're gonna look into this a little bit further on Friday. I'll open it up for some shitcoin questions, but in general, I don't care about shitcoins. So, do I trade them? Yes, but utilize the analysis tools that I have presented to you, and ask me about what you're seeing. Tell me what you're seeing rather, and I'll try to confirm it with you. I think that's a good way to go about learning, to do it for yourself, to see if you have confluence with what I'm seeing. So, but if Bitcoin breaks back out to the upside, everything's probably going to run with it in terms of US dollars. So just understand that. Back above 72 and it's running its highs again, you're looking at everything else pumping to its highs. Locally, at least. Whether it breaks out or not, we don't know. So I'm going to leave you all with that. You have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. I am going to leave the stream up for a little while to let you all who like to chart to some tunes, you're more than welcome to do so. I'll leave the stream up for about, do about 10 minutes or a little less than 10 minutes here. So we'll do 13:05, about 8 minutes or so. You can review some of the things we talked about. Mark up your charts to some tunes. And yeah, I will talk to you in recorded format that will be streamed live with me in the chat tomorrow night, yet again, like I've been doing lately on Tuesdays and Thursdays. So you're more than welcome to join me tomorrow in one of the chats where I will be streaming primarily on, and I might as well just stream it to YouTube as well because people can't really chat on the X platform, apparently. And then we'll kind of go from there. But either way, thanks for hanging out with me. Have a great one. Please be safe, trade safe, more importantly. And don't kill yourself with leverage if you can help it. All right, with all of that being said, Landy out.